We have a rockstar panel here. And this is the best panel today. I promise you that, because everybody wants to know how to make money, and these guys are the pros in trading and investing in crypto. My name's Andrew Dix. Some of you probably saw me up here earlier today. I am the founder and CEO of Crowded Media Group. We are the publisher of Crowdfund Insider. We cover the full stack of fintech, including crypto and blockchain. And I'm going to ask this group of experts to tell you who they are. I'm going to start with Alex.
Hey, I'm Alexander Blum. I'm the founder and CEO of, and I can speak, founder and CEO of Atomic Capital. We operate as a broker-dealer in the United States, are providing security token offerings. One of our clients includes a publicly traded biotech company called Agenus that's doing a private placement. We're also offering, just announced the other day, up to 85% LTV crypto-backed loans on Bitcoin and Ethereum, and also have a venture fund that's investing in capital markets technologies on the equity side.
I want to talk to you about that afterwards.
I mean, we're still accepting LPs.
I was going to say,
this
close
is cool.
that deal.
Okay, all right, we'll talk later. Go ahead, Randall.
Randall Crowder, COO of Funware, recovering venture capitalist until I left the dark side to actually build real value with a real team. We actually went public last December, so exciting new world of being a public company, also with a innovative new security token called Funcoin. And I also have the pleasure of working with some incredible people actually here in California, what we call the Watchers. Got them right down there. It's Chase, Dan, Zach, and a great community of people who are all about educating and bringing resources to this industry and hopefully ushering in the next stage of kind of mainstream adoption.
Excellent. Yali.
Hi, and like you, I used to invest in technologies, mainly impact investments, but now I'm a co-founder and CEO of Innovesta with my two co-founders there. And we are a platform for all of us, for investors to make investments with our eyes open. We have developed a technology that connects AI and crowd wisdom to really get what's going on with our investments, with our assets. So we're no longer hostage to the self-nominated channels of entrepreneurs.
Mark Hamade. I'm an expert at nothing except maybe 7 surgeries I've had. Part of a late-stage fund, but I'm doing a stealth fund to help early-stage companies and fund women entrepreneurs and actually fund a company all the way through. I got into blockchain because I wanted to get rid of sex slavery, and I'm about creating jobs. I don't care about the tech. I don't care about the different things. It's about creating jobs because it's about life, right? All we have is the animals and the people, and it's about enjoying life every day and just making a difference in people's lives.
Here, here.
You need to run for office.
That's right.
You've got something going on there. All right. So first of all, we're kind of in this transition period, and I made a comment to somebody here a little while ago that nobody's mentioned shitcoin today or yesterday. Was I think the last conference I did a while back, there was a lot of that being tossed around because we're going through this transition of ICOs to STOs. But a lot of these guys have actually invested in ICOs, and so I wanted to do like a quick crypto post-mortem to see what type of returns they've experienced. Good, bad, or maybe they can lie about it too and say that they hit it out of the park. But we're going to start with you, Alex, because you've been doing this for a long time. You invested in ICOs. How did you do?
So I don't want to deflate your question, but so we haven't invested in ICOs.
All right.
But I can say that, the reason we created our company, Atomic Capital, to provide regulated fundraising services using blockchain is basically the database for that, or, with Onera. They're not a partner, but I'm just that kind of example. Is because I came from like traditional finance world, and it was evident to me in the U.S. at least, good or bad or in between, that these were regulated fundraisers, and so we thought we could provide a better way to do that. I could say that it's not investment advice, but I own a bunch of Bitcoin, and I like that.
Okay, well that counts. You own a lot of Bitcoin. You've done well with that, but you invested in the equity of some of these companies, correct?
So we've made equity investments into startups, which is more focused on the capital markets infrastructure space than it is specific to blockchain. Though a lot of the kind of interesting stuff coming out right now is blockchain related.
Okay, all right, cool. Randall.
The same. I'm a big fan of the dirty little secret that I think a lot of people don't realize is that most institutional investors are investing in equity, not just straight token plays, and so they're not always kind of mutually exclusive. And so I think for me, I have a fund that focused purely on investing in companies that were happen to be leveraging blockchain, because I know it might come as a surprise. The overall market cap of a coin is not directly correlated to the health of the business. The business actually can run separately and be funded by institutions, and online gambling that represents exchanges and people trying to speculate doesn't necessarily always coincide. And so I've done very well. But again, as I talked about what we do with the watchers, there's so much about education and going in eyes wide open into investments, understanding why you're investing. Momentum and sentiment usually drive most of the things that you see on exchanges. And so if you kind of understand, human psychology and rationality, it's not impossible to kind of understand the trends and where the market's headed. Chances are, if everybody's really excited about something, you should probably pump the brakes and back off. So,
Pump the brakes.
but I did invest in the Tezos ICO.
You did?
I did.
That
was one ICO I did.
That was not an investment. That was a donation.
That's right.
You read the white paper. Well said. It was a donation, right? And Yali, you have not.
I have not invested in ICOs. I've invested in technology, and I think part of why we've built this platform was to really, we saw that the revolution is now going through an evolution which needed to happen because the market was going crazy. And so not out of a loss or a win, but out of looking at this and saying, we have to make this work. It's true. We need to decentralize. We need to bring the crowd back in. So we need to do it smartly and responsibly.
Mark.
I just want to say a few things that people haven't touched on. ICOs are not bad. The people who did the ICOs were bad. If you have the same people do STOs, they were liars. And nobody has given also the investors. A lot of investors want to be lied to. They want you to tell them it's going to make 10 times, 20 times. I've heard that on stage. Oh, tell me, on Medium, on Telegram. Is it going to make more? Is it going to make 10 times more? It's like pitch decks. Have you seen a pitch deck that shows you're going to lose money?
Well, if you manipulate it, you can. I mean, that's a good way to guarantee that, right? Yeah.
So that's the issues. You will never find a company with great leadership that has failed. If you invest in good people, you'll make money. They'll pivot, they'll change, they'll whatever. You invest in people who are full of shit, well, you're going to lose money, and then don't complain.
So don't support Satan. Stay away from the dark side, right?
Absolutely.
You don't want to do that. Okay.
Well, let's be honest. I mean, he's exactly right. And ICOs, people are lazy, and they lack any semblance of accountability. So everybody wants to blame someone else, and nobody actually, everyone just follows the Reddit crowd or the Twitter crowd or some trolling, and they get into something that they have no business doing, and then they complain about it when it doesn't go the way the way they thought it should. And so, and being in venture capital for over a decade, it's called due diligence. It's called researching the team. And the interesting thing about the blockchain and crypto space is you have incredible access. Like, you can literally pick up, and people in crypto, and engineers and specifically, they love to talk about what they're doing. You can literally do diligence, direct diligence on almost any single cryptocurrency play out there. They love to talk and tell their story. And so the fact that no one does that, and then they wonder, like, oh my God, you mean that LinkedIn profile wasn't real? Like, they weren't trustworthy? Like, yeah, it wasn't. Sorry. And so I think what happened was necessary. You needed to wake people up to the rise of credibility and actually understanding where you're putting your money.
So when I went to that Telegram pump group and they told me it was going to go up by 20,
but the little moon emoji, the rocket ship emoji, it's so compelling.
I mean, that got me every time, right? It's going up. I know it.
I would just say maybe as a counterpoint, I think that it's unclear where the responsibility lays, where these are they should be regulated, or if people invest, it's at their
lies with the person. Sorry, go ahead.
It's not up to me whether or not it's regulated. It just is. But the reason for that, I think there's a tension that's shown when, you could be like, people are dumb and they're just greedy and they don't want to take responsibility. But there are people that just want access to making money, and instead of buying lottery tickets, this seems like another venture where other people are cashing in, and a lot of the funding is engineered, which shows why there's a reason for regulation and accountability. But I think we shouldn't demonize people for wanting to move ahead in life or having some access to things that are usually just for a privileged class of people. And
Yeah, and I agree with that. But I think that the fraudsters and the scamsters, we need to get rid of that. I mean, that's done.
Well,
and
yeah.
now we're here at the junction of STOs, right? Security token offerings, digital securities, smart securities. I don't care what you call it, but effectively it's securities on blockchain, right?
yeah, I mean, there's securities. They're
They're
known
just
regulated
securities.
products. They're held on
Yeah.
a different database, which adds a few extra features.
So what are you investing in now that are digital securities? What is your group doing?
Well, so I could say, like, on our platform, companies doing security token offerings. One is a Nasdaq-traded biotech company that's selling a royalty share of
Okay,
their
that's
leading
cool.
clinical trial asset.
Yeah.
So they can essentially get better terms on financing and open up access to more than just a privileged group, but it's still accredited only, which is a limitation. Another group is a U.S. licensed bank that's creating a new like e-bank akin to something like Revolut. And the third company is doing a Series A. It's an ad tech company.
Who is that? The Revolut competitor?
It's called Zenus Bank.
Okay.
They'll be going live next week, actually.
Okay.
And they've already acquired a bank license and are, I think, a promising company. And then the third is an ad tech company.
Did you get a bank license from the OCC? I'm sorry.
It's a Puerto Rican banking license.
Okay, got it. All right. Keep going.
And so the third company is an ad tech company that did $8 million in revenue last year, called Mad Hive. They did contracts for a bunch more than that this year and are just looking to raise money. But known companies with known valuations. As far as what we're directly investing into, the closest of those three would be Zenus Bank, but actual capital markets infrastructure, things with unique regulatory advantages, or things that are going to change the way the infrastructure of our capital markets work or the way finance works. And I think where we're at in the stage of the life cycle is, I think you can see this like stage where there's the infrastructure investment and then all the applications on top of it. And I think we're still maybe mid or later part of that infrastructure cycle before you start seeing really useful applications built on top of it. And that's also what we know about is, we have a team of software engineers and finance people, so that's what we're really equipped to assess.
It's a perfect marriage, right?
Yeah.
Yeah, finance and tech. Yeah. Randall.
So easy for us. So we did an SEO. So it's called Funcoin. We have a Reg D for accredited investors, and then we opened up a Reg CF just to actually have unaccredited investors. And quite frankly,
It was on Republic, right?
yeah, on Republic.
You did well.
So, incredible platform. I mean, they really, there are ways in which you can get compliance. So I don't think, whether it's securities or not, it's all about compliance. And I do agree with you. It's all about, regulation and ensuring that we're operating in an ecosystem that is both credible and can give people a certain level of comfort that what they're doing isn't just an outright scam. And that's absolutely needed. And so that was one of the big reasons why, we wanted to go public, to basically say, hey, here we are, a transparent company that's been around for 10 years, and then there are certain avenues that you can apply through the SEC to do it in a compliant way.
Were you guys the first?
I don't know if we were the first.
You're close.
It felt like it.
Felt-
There was a lot
yeah.
of back and forth, a lot of question and answer.
Not in a good way. It wasn't like,
I have too much time with attorneys that I would like, but that's what's required. And to your point, I mean, there's a lot of people out there who have never met. They did some remote call, got on some Google Sheets, wrote a white paper, and said we're a business. And no, they weren't. They've never
They
been.
didn't even
through-
write the white paper.
That's even worse.
Somebody to
That's
write
even
it.
worse. And so for us,
it was a great business model while it lasted. Don't
that's
knock
right.
it,
And so, we're all about, the idea behind, Funcoin is tokenizing one of the most valuable assets on the planet, and it's data. So while I agree that there's a lot of interesting securities type plays, it just screams of more of the same. We want to try to lead the effort on how do you introduce mainstream, real world applications, solving real world problems in a compliant way using blockchain, so that eventually blockchain just becomes TCP/IP. It's just something that allows you to do something and engage consumers in a different way. So that's there's for a longer discussion, but that's what we're working on is consumer facing
Are you facilitating issuance too with your tech?
Mm-hmm.
Okay.
Mm-hmm.
All right.
You have to. At the end of the day, the consumer just wants an experience. They're not enamored with the tech. They're not enamored with all the platitudes that we often say on panels. They just want you to delight them in their real world.
Have you done any issuers via your?
We have not distributed yet. No.
But you're getting close.
Yep.
All right. Yali.
I'm just here going to serve all of you because you're talking to our point. So we can't invest based on the structure. We give service to investors, but what we see is that the companies that shine or that are getting more and more interest by investors that we're putting to our platform and seeing how they come up are with high integrity. and that people really say what happened and talk about what really is important, like the old days, the business. There's a use case, there are clients, there's a value, right? Remember that part? So really, that's what we're seeing. So companies that are just a lot of buzzwords don't get good scores on our system, and that's how we know, what's coming up.
You mean if I use the word immutable and I use the word?
It's not going to be enough.
You're giving me money. That's all I have to do,
be enough.
right?
Our system looks at leadership density, at the business agility, at integrity of information. So you understand what's the DNA of the company, even if you can't see them face to face and really, look at the eyeball of the entrepreneur and love them or not. So.
But you're a true believer in STOs. You think this is the future.
Yes, we believe in decentralization. We believe in immutability of knowledge. We don't need to recreate our stories for anybody, and then let's really focus the capital on good companies and do more of those. Yeah. So we definitely think the world is going there and should go there, but safely and transparently.
Okay, I'm good with that. Mark, you just want to have fun, right?
Well, so let's get something straight. Raising money and being successful are two different things. And raising money is a full-time job, and running a company is a full-time job, right? So one, they're both separate. And when I look at it, when I was in a wheelchair for 2 years, I needed a cane to get up. So if the business is sustainable and then cannot be done without blockchain, then you use blockchain. So an example, I talked to a young lady yesterday. I drove an hour and 45 minutes to Gus's barbecue. She's dealing with a company where a young lady wanted a black baby, and she ended up getting an Asian baby. Okay? So babies are getting mixed up. Now, if you wanted a black baby and you get an Asian baby, you know it's mixed up.
So you put it on the blockchain?
For the tracking, yes. So with the eggs. So just imagine if it's a white baby, right, and it gets mixed up. You wouldn't know because they're both white. So there's a lot of that happening. That's pretty bad. I mean, this is a child we're talking about. It's not funny, actually. It's not funny. You wouldn't want your child being mixed up. It's like sex slavery. It's a $150 billion industry. There's over 20 million people in sex slavery. It's pretty bad. So blockchain can help with the tracking, solve that. You can't but if you can solve something without the blockchain, then do it, because it's much easier. It's going to take us, everybody talks they're like an expert. We've been in banking for 100 years and you're not an expert. It's going to take a long time. The internet took, 60 years? So, but it's good for things like that. And so, is the business sustainable, but you can't do the tracking, you can't do the logistics piece of it, then blockchain is great. But if you can solve it without, then you can. I'm a stage 4 cancer survivor, and when I went to different doctors, they didn't know the left hand from the right hand. That's why I went to stage 4 and almost died. So now you can do a token where you can track it and say, okay, Mark, you can do chemotherapy, you can do vitamin C IV, you can do this. So then you have the plethora of different things that you can do for cancer and go through each one before you're dead. But when you go to your doctor, whatever you tell him, it's missed. It's not kept track of.
I think there is an argument for working with healthcare systems to use the blockchain, and I've heard some good panels on that. But I want to jump back to investing right now and jump over to trading, because I know some of you guys trade too, and that's interesting. It can be fun. I don't know who wants to jump on this first. Randall, Alex, you're
the expert.
You're a quant, right?
Yeah.
I have a background. I went to MIT and I've worked at both traditional hedge funds. Trading.
You were killing it, weren't you? You were like flipping coins on Binance, like in all hours.
Card counting, the whole thing.
Yeah. So the things I've worked on are trading options on volatility ETFs, which have some similarities to blockchain in the sense that they're really not asset-backed, but more based upon sentiment, and it's called the VIX is called the fear index. Essentially, it's more measure of sentiment. And similarly, I worked on a crypto hedge fund that was using AI with a team of developers trading crypto and secondary markets. And what I can say, one is, if you don't know the game behind the scenes on trading some kind of new cryptocurrency, then you probably are the game. And then secondarily, I would say that just seeing, I did some trading just kind of as a hobby.
That was the same Telegram channel I was looking at, right?
Yeah, you're the meat for the grinder there. But I'd say secondarily, after working on this AI hedge fund, it made me feel kind of ridiculous trying to trade things on my own just because what you're competing against is not a human being. So there's only increasing in sophistication, and I would say it's very hard to do that in any kind of technical or short-term trading to outcompete something like that, but I think fundamental investing still makes sense. If you invest in good companies, they'll be good companies.
So it's a word of caution to people who like to trade. Randall, what do you say?
I think self-identifying is important, being very self-aware about who you are and what your skill sets are. Most people fancy themselves a trader, and to his point, the chances are that they are the game versus just being a traditional investor. When I think about venture capital, I mean, my horizon is 5 to 7 years, and so I don't get real worked up in the interim because building anything of value takes time. And so I think what people can do now is really educate themselves. They can really learn more about industries, learn more about if you are doing technical analysis or fundamental analysis, just the basics of it. The bear market's a great time to learn and a great time to really position yourself if you're going to play in this space. But then even more important than that is surround yourself with other people that understand maybe more than you do and that you can go together. That's why we started the Crypto Watch, was really to bring a community of people together to really educate and share knowledge. And so there's this great community around crypto where people will try to lift each other up and help each other understand what's going on in kind of a non-abrasive way. And I think that's where people can hopefully succeed the next time around when the markets do run, because these things happen. It's cyclical, and these historical patterns will repeat. So the next bull market, are you prepared to not make the same mistakes? And I jokingly tell people, if you wake up in a cold sweat, or you're rushing to try to log in during some sort of random event, you probably are the game, and the best chance you have is to shut your computer off and walk the dog.
That can happen in traditional markets too. I've been
Don't be
there.
reactive. If you aren't already well positioned in whatever you're doing, and you have to do something very quickly, walk away.
It's pretty exciting though. Your blood really gets pumping, and
It's like a casino.
It's like a casino, right? Yeah, exactly, it's a casino. So cool. So Yali, any thoughts on trading? You're not doing that, right? You're too smart for that.
No, I'm not a trader, but I do think that we shouldn't be naive. I mean, fear of missing out is something that drives this industry, and it will drive not just this industry, traditional, new blockchain. And I think we just need to remind ourselves, or have enough tools, which will happen next 3 to 4 years, to be responsible with what we're doing. And if you are a great trader, go be a great trader. But really, let's look at other industries and question. We do it a lot in our company. Why do people just invest because someone told them, and they don't even check if they really knew what they're doing? So
you mean like Martha Stewart did? Yeah.
So that's a bigger question. It's not just for blockchain.
Plausible deniability.
Yeah, plausible deniability.
Yes.
Mark, do you have any thoughts on trading?
No, I mean, I looked at a platform that this Chinese guy built recently that's pretty amazing. I admire people who do it and who do it well. And I think it's really cool, but I know what I'm good at, and I know what I'm not good at, and I stay away from what I'm not good at.
Yeah. Good advice.
That's the best advice you can give somebody.
That's a good advice. So, looking at the stack of the kind of the blockchain ecosystem, I think that you mentioned you're doing protocols, mainly Pix and Axis type stuff, or you support.
So, I mean, we're investing in companies, so it's Pix and Axis, I think, I would say not protocols, but companies that are generating money, that have a regular business case, and can explain to me how they're going to make money in the future. All right,
cool.
Same. I mean, we spent the last kind of Q1 with IBM looking at how to kind of really tie organizations and institutions into real-world blockchain applications. And arguably there are existing protocols that you can launch just about anything on already today, but it's kind of one of those situations where everybody fancies themselves the smartest person in the room, and everybody wants to build one. The world doesn't need yet another platform. There is going to be a natural consolidation to a few that are trusted and proven and reliable and have been around. And then I'm excited about the ecosystem that builds upon that. I mean, whether it's Ethereum or Tezos or any of the we're using Stellar. There's a lot of great, interesting, use cases that can be built already on existing, protocols. So.
I'd say also just in the innovation cycle, if you're just showing up today with a new protocol, it's what have you been doing the last 3 years? It'd be alarming.
Yeah, well said.
Yali?
I mean, again, I think there's enough, enough protocols, and we really need to see businesses on blockchain because there's a huge advantage of doing things that are on blockchain if there's a case. Immutable, it's going to change the workforce, it's going to change how we look at things, where we spend time at our day jobs, and how we can be really more effective into getting wherever you're working, to be more profitable and bigger and more successful. So I think that's where I would like to see things.
All right, cool.
To me, if I'm not adding value, I'm stealing. So I like to do things for free in the beginning and see if I can add value to the company. If I can add value, then maybe become an advisor, then I see how the team is. Are they listening? Are they not? Then it kind of goes from there, because I really have to know them, right? So a lot of times I'll be talking to somebody and they'll be like, oh, I know this, or I already know this. I'm done. You need money, you need execution, but you need to not have the ego. Because without the ego, you can pivot. You need confidence. But you have to get to know people. I mean, my biggest failure is I worked with a guy that I thought was caring, and he was a narcissist. And he's like, caught him later saying, I hate Arabs and I hate Mark, but Mark helped me raise $25 million. He had no money, and I helped him get $25 million. It's a big failure. I'll die with that failure because.
Are you guys still close then, or?
No, but he was great in that sense, and I mean it wrecks lives, So you have to be very careful. So I'm very big on that, and really have to get to. Without people problems, you have no problems. At the end of the day, period. You can solve anything if you have the right team and you get them to work with each other. Everything can be solved by people. Even AI, people created it, right?
Right.
So
team counts. That's where you start. That's like start spot number one, right?
I'll just say one thing I think is interesting. I was at a different panel recently, and someone was saying, oh, like, doesn't it, if there are security tokens that are being traded on a secondary market, it's putting a valuation on those companies, which can be problematic for future fundraising, where, the traditional, like, VC at least pathway, which is not the traditional pathway for most businesses, but if you are taking that pathway, you're propped up valuation upon valuation, and there's an issue for that if there's actually a third-party assessment of what that's worth. I think both pathways could have pros and cons for groups, but I just think it's something interesting to consider.
No, that's a good point. That's a good point. Well, so let me ask you about a specific deal, because earlier today we had David Chalm's Elixir. They're getting ready to do an issuance. That's kind of a protocol. You guys, you buy or not? Buy or sell?
I know nothing about it. More research required.
Even a better reason to say buy it, right? Because you know nothing about it. Oh, okay. So
we'll invest your money if you want.
You'll invest my money, right? Randall?
Look, we're trying, about 1 billion active devices touch our platform every single month, and we are trying to figure out how to achieve mainstream adoption without asterisks. And so, when I hear about people, which I hope it's an incredibly successful project, I hope they all are.
Right.
But when you start to kind of say, well, I'm going to set up offshore, and I'm going to do this, and I'm going to have 3 shell companies, and I'm going to do all that, I think that's what people, it's the opposite of where we need to be moving. I want to lean into regulation. I want to lean into compliance. I want to say, here I am, how can I work within an ecosystem? And I am not going to forego one of the largest and most vibrant markets in the world, the U.S. economy. So how can I play well with others?
Yeah.
The SEC, is the long arm of 3-letter agencies, extends pretty far. And so, I don't, convince myself, that I can do certain things internationally that will prevent certain audits of my activity. And so I'd rather lean into regulation.
Yeah, point made.
No, I actually agree with you again, because I think we, as a community, we want to take upon ourselves self-regulation. We want to, even before there's the final lines and everything is clear, because it's going to take some time, and then reevaluate. And how do we self-regulate? How do we, as entrepreneurs of this ecosystem and as an investor, say, we're going to make it work? And again, not to find those weird structures that probably are legal and great and work, but let's be transparent, because that's what this is all about. Otherwise, we can go back to the old ways of doing things, and we all know them. It's easier.
Yeah.
Yeah,
Mark.
I agree. I mean, but again, I don't know the people, so it comes down to, I've met people who I thought were good, and then you go to the next room and they're doing cocaine or doing this or doing that. I mean, seriously, there's a lot of that, right? So Is that somebody I want to invest in? No. No, thank you, okay? Are they
So
cheating on
that's
their
a
wives?
disqualifying event, right?
Yeah, I mean,
They're
look,
blowing coke.
I don't want to invest in a cheater,
Red
right?
flag.
I don't want to invest in a cheater. I don't want to invest in somebody who's going to, do this, do that. So that's not successful. And that's not what humanity's about, right? If I wanted to do that, I can become a drug dealer, and you can make a ton of money doing that. There's easier ways to make money.
I want to commend, I think it's somewhere back here somewhere, but, Alon and Joseph, what they're doing with Crypto Invest Summit is, and you can tell the tenor and just how people are speaking between last time and this time. And we're not talking about Lamborghinis and Moon and, to your point earlier, shitcoins. There is a professionalization and a maturity and a maturation process that's going on in the market right now, which is required, because when you're talking to an organization or institution or Fortune 100s or Fortune 500s for that matter, they're not interested in colorful characters and silliness and stupid one-liners and just kind of almost like a comical joke of an industry. They want to understand, how is this going to affect my shareholders, the long-term value of what I'm doing. There is a natural, professionalization of what we're doing that you're starting to see now. And so I think the next wave of, real-world blockchain solutions that solve real-world problems that are backed by real teams with real experiences, that's what people should be looking for, because that's the future.
Okay, so good point there. What is that next wave? I did a panel yesterday about tokenized VC funds. Is that part of it? And some of those guys are still here. Do you see that as a good stepstone to?
I think it's everything. I mean, I've said this before. Blockchain is the single greatest innovation to reach the global economy since the Medici commercialized double entry accounting. I mean, that's it. It's a huge idea. The internet is about the dissemination of information. Blockchain is the dissemination and recording of value transfer. It's a huge idea that got kind of lost in all the silliness and comical behavior, but that happened in the dot-com boom. And
right,
so,
yeah.
You started seeing just silly.com this, and people
Pets
cared about
.com,
what chairs they were buying. So that happens in every industry. But what blockchain can do for any industry, not just venture funds. I mean, if you can think of an asset or, an efficiency, to your point, if there actually is a real use case for it, then absolutely. So like with Funware and Funcoin, we had to use blockchain. I couldn't use fiat in order to achieve what we're doing, because data is so massive and it's so dispersed across so many different sources. Only blockchain could keep up with the velocity of the transactions that we see every single day. So it's the right technology at the right time. So when you find that, whether it's a venture fund or a commercial application, it's huge. It'll redefine all from document provenance, supply chain, financial transactions, data for us. It can apply to so many different industries. People will look back in 4 or 5 years and go, God, I wish I would have learned more. I wish I would have gotten more involved. But that happens every single time anything cycles. People go, I wish I would have.
You've got to look around the corner and then the next corner,
Yeah.
the next corner, and that's hard to do. Mark?
Well, are you doing it to solve a problem or to raise money?
Yeah.
If you're just doing it to raise money, that's a big problem, right? And if you really don't care about solving problems, you don't care about, creating jobs, etc., then it's like a Bitcoin. If it keeps going up, it keeps going up. Why are you going to work? You've got the money. What's the point? If your 10 million becomes 50 million and you don't care about creating jobs or whatever, you're going to take the money. If you look at
you're driving the Lambo and blowing coke in the next room, right?
Look, I think a lot of those people didn't have.
It's a lifestyle, man.
Those people didn't have self-awareness, and they weren't really happy. If you really look deep into their ethos, but look at Bitcoin. When Bitcoin was going up, all those guys, crypto whales, we knew what we're doing, blah blah blah. They were the kings of the world. When it went down, it was like crickets, right? So they made fun of. You look at Jamie Dimon, Tim Draper said today, well, Jamie said this. Jamie is smart, okay? He said Bitcoin sucks, blockchain sucks. Okay, then he saw it didn't suck, so he got involved in it. Hey, you know what? We're humans. We make mistakes. If it doesn't work, you don't support it. If it works, let me ride the wagon. That's what bankers do. I mean, what do banks do? If you have money, they'll give you money. If you don't have money, they won't.
It's a great business, isn't
right?
it? No,
it's a genius thing, right?
We've seen the bankers and the lawyers. I mean, what are we doing here, right?
I guess I would just add that I think that if people are going to change what technology they're using, it can't be an incremental benefit. So I think like it's cool to have a tokenized fund. I've worked on some of the early tokenized funds myself as a consultant. It's a limited benefit. Like you can only have at max 2,000 people holding it. So
Right,
there's some promise of liquidity, but it's incremental. It I think becomes a detriment in most cases if you're talking to regular investors that aren't part of this conference, essentially. So I think the question is, how do you get widespread adoption? The other challenge is, there's pathways for fundraising. I think Reg A or S1 is a public filing. So I think those pathways allow you to start allowing the public to be non-accredited, and then you can start blending in investment features with actual utility type features and have new kinds of products that weren't previously available. It's complicated to do that just from a regulatory perspective. And
Well, first,
all the
the
weighting
SEC
and
has to
expensive.
qualify a Reg A plus that mentions blockchain in it, right? They
mean-
won't do it. They're afraid.
I'm not a lawyer, but there's nowhere in like a SEC where it says you have to tell people what database you're storing your ownership on. So my understanding is, and this is like not legal advice, but other groups are just pulling that out of it. Why the SEC doesn't ask
That's
what
what
database.
everybody is doing, and then they
Yeah.
figure they'll go back and they'll tokenize.
So I think we should be freedom of database for where we hold our ownership. That being said, I think that on the blockchain side, as far as like what's the big thing to get past incremental change, you have to have widespread adoption. It's a network technology to begin with, and so the questions I'd be asking is how do you get a lot of people to use this in a way that's meaningful to them? And I think when we can get identity onto a blockchain in a unified way, you can start doing really interesting things.
Yeah, cool. Real estate. What about real estate? I mean, you see a lot of panels about this. Real estate's a tangible asset that has traditionally been hard to get into.
Yeah.
Is blockchain going to fix this? Is it a panacea? Is this the one tech to kind of rule all the properties?
So I'm in the process of writing an article for Forbes called "Why No One Is Buying Your Real Estate Token." And
I'm glad I asked you the question then, so you can, yeah.
So I think it's similar to what I was just saying, that like there's already plenty of good options to invest in real estate. I'm not sure if real estate investors looking for like a fixed income or moderate return, why are they going to take all this perceived tech risk at the end of the day to end up with real estate? I think if that's going to happen, it's going to come from the institutional side in high volume, but I don't think me or some other group selling like bad real estate at overpriced margins is going to really move the needle.
That's a bad investment. What do you think?
Don't touch it. Don't look into it. I mean, I'm interested in only mainstream adoption at a massive scale for consumer applications.
Cool.
And real estate is just another, venture funds, real estate. That's just the same people, the same powers that be doing the same thing in a different way.
All right. Yali?
We actually have a few clients that use our system that are looking into tokenizing assets in real estate and really want the crowd's opinion and the crowd's wisdom on those assets that are being brought to them, because again, everything is said by the owner of the asset. So actually, we do see some interesting applications there to, again, get transparency before investors jump in onto something that's overpriced or wrong. But we were surprised we didn't look at real estate as our part of the assets we were going to create an index for, and it came to us.
So you Innovest addresses a specific pain point, and that's having good diligence, which is a lot of work, and most people don't do it because they're too lazy or they're not sophisticated enough.
And
but
ongoing
diligence, because
it's not just the first
things
time
change,
you go in.
people pivot, people
Right.
leave, and sometimes that can be a bad sign. We've all seen that.
Right.
You mentioned FOMO, which drove a lot of the ICO market, for better or for worse, probably for worse. What are you guys doing differently with your service here?
So the concept is clear to everybody. Everybody wants to have the right information about the company, not after everybody saw it, but before, during. And our claim to fame is that we developed the process to be differently. We actually decentralized the due diligence process. So yes, we collect everything that's out there about an asset or a company, but then we have today about 1 million people in our community that are being matched in context to the specific asset, and they vet the information. So like I'm from Israel, the Intel process, there's open source intelligence, and then there's the human intelligence, but they're not our employees. So we have decentralized the know-how. We don't believe there's one place or office or group of analysts that know it all, and we just decentralized it. So we can give it in a cost-effective price to the world.
And you're running that now. Is it live now? Beta, alpha?
It's ready to be bought, and it's being bought, as a service for investors, very low cost on purpose. The feedback we're getting, it's too cheap because it's $100 a year to
I
sue
would
many
never
companies.
tell you that.
No,
Yeah.
people told us that because the value, they see it like the new Bloomberg terminal. Finally, it's not two-dimensional, and it's not one analyst guru that then says something and then goes away because he said something wrong. And, but we on purpose are pricing it this way because we want everybody to have access, and we want the crowd to be, able to come back into the game.
So it's a diligence platform, effectively, and so
Yes.
I want to check that out. I tried to check it out the other day, and you guys were doing an update, so I need to go back and take a look at that. Are there any other, Mark, are there any other pain points that need to be addressed here?
No, I mean, I think you said it, but when it comes to real estate, I'll just say one thing. Just like Steve Jobs was amazing with perfection, people who are amazing in real estate, they are amazing. And they make quite a bit of money, especially with 1031s. So a $100 million building, only a few people can afford that. But you could tokenize it to have people who are putting in 100,000, 200,000, 400,000. I know somebody who's made so much money that in the past 5 years their business wasn't doing good, but because of the real estate, they were able to support their employees in that. You need your job to pay your bills, but you need to invest properly to be able to sustain the rest when your business goes down because of whatever reason, because it's up and down.
Yeah, fair enough. Do you have any thoughts on that?
No, I mean, I want to underscore something she said that's very important. The future of blockchain, the real world value for it, has nothing to do with anonymity in my mind. I think it's actually the opposite. It's what we talked about at IBM. It's what we talk about at Funware. The ability to verify and attribute certain information and abilities. I mean, everything's a fraud now. I mean, you really don't have 10 million followers on Instagram. You have some smaller amount of that.
You
so
bought
how do you
9.9 million.
leverage blockchain to audit and verify information out there? Because in a world of nonsense, credibility is king.
Yeah, absolutely. So how is deal flow right now? Are you guys seeing a lot of good solid deals? Is it up, down, hard to measure?
I don't think, we've looked at over 600 different projects in the 10-month lifespan of my company.
Okay.
And we've agreed to work with 3. But good deals are hard to find. If they were great deals, they're already funded. And so I think the challenge is finding those needles in the hay that have a team, have traction of all these things, and are authentically in need of cash. And once people know you have money or that you can help them raise money, you have a lot of friends all of a sudden. But it's we spend the majority of our time just kind of sifting through things that are difficult and assessing, can we put something together here as well that could at least as the raw materials of a good investment.
Randall?
Same. I'm investing in myself now, so I don't have any other deal. It's nice when you have your own deal because you just invest in yourself.
Yali?
We see actually, interesting companies brought up by our clients to us that are more serious, more serious. And the questions are, they're always the right questions, the business, the people, but it's refreshing. I think we're waking up again. That's what I see. Yeah.
So you're seeing more deal quality?
Yes, and not just everybody's out there. People are coming, more
I would
cautious.
say the security token space at large, there's better groups moving into the space. We met with a very large property developer the other day that's trying to tokenize billions of real estate to rebut my previous point, and other real companies with real experienced team members. And so I definitely see a tide turning.
Real companies, that's important. Mark, last word.
To me, it's about care and perseverance. And then as far as the pitch deck, if my 10-year-old can't understand it, I send it back to them and I say redo it. When a 10-year-old can understand the pitch deck, then it's a business that I want to look at. But if it's so complicated and complex, I have no interest.
Perfect. Hey, guys, thank you very much. A big round of applause for an awesome panel, right? Great job. Very cool.